But let's be real, you're not going to build this thing out. You want to get someone to come in here, and that gives you potentially enough money to develop out the other three assets in a similar fashion. That's your business model?
That's the business model. In the best of worlds, that's what you do. A four-man team junior company that says that it's going to build a deposit. In this day and age, it is. I mean, you gotta be credible when you want to do this type of thing.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. That helps us to understand that this is the sort of video you want us to be producing for you. You can also leave comments below. That helps us with the sorts of questions you think we should be asking, how you think we've done, and of course, what you thought of Cartier Resources. You can catch this as a podcast, transcription, or article on cruxinvestor.com. And of course, for Crux Investor Club members, you get early access to this video, training videos, and also insight from market experts from all around the world. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We caught up today with Philippe Cloutier, who's the CEO of Cartier Resources, their TSX-V gold explorer in the Abitibi. We spoke to them about a month ago. The share price has doubled since then. We're going through some meticulous process with their Chimo flagship asset, getting to the point where they're sort of walking up towards a PEA. They've also raised $9.3 million since we spoke to them last, of flow-through money, so that money's got to go in the ground. Have about $14 million in total. Market cap now at 65 million. So starting to get towards the sorts of valuations that they think that they deserve. So lots discussed today. Do catch up and watch the previous interview as well, if I may suggest. But take a look in the description below at some of the things we discuss. Click on the number beside any topic that you're interested in, and I'll jump you to that part of the video. Otherwise, sit back and enjoy what Philippe has to say.
Philippe, how are you doing, sir?
Doing fine.
Glad to hear it. Now, we spoke to you back in May. How have you been since then? How's life?
Excellent. I mean, we've had a terrific summer here. This is mine country, so obviously a lot of contractors and busy in the Abitibi. And because of COVID issues, obviously, not many people took vacations. And we've readjusted the work around that. But it's been a terrific summer, really nice weather. Been growing a lot of tomatoes.
Oh boy.
Discovered the journey of tomato growing, quite a challenge. You know, we've actually dovetailed into more of a corporate development process with Cartier, where, you know, the consultants that are working with us have had to rearrange their personal lives as well, and all to the benefit of where we're moving next. And you might have seen throughout all that, right in the middle of summer, a pretty important financing that we can.
Yeah, well, look, we'll talk about that. Just let me understand the word. What you mean by corporate development? What do you mean by that?
What I mean by that is that obviously so far in the last 3 years, we've been focused exclusively on developing the Chimo Mine project. You know, exploring it and orienting it towards, can this thing fly? Can this thing get off the ground and fly? And recently, or in the last interview I had with you, we had demonstrated that this thing is going to work. And so we've completed all that heavy lifting, and now we're in the final stages of setting the table and with a third resource estimate and working towards a PEA. So that's the corporate development aspect. But our corporation is not just Chimo. It's 3 other projects, exactly. 3 other deposits.
Okay.
So we've had to engineer our corporate development around continuing and completing the work efforts on Chimo while emerging a dynamic exploration program on Benoist and Fenton.
Understood. Just wanted to be clear there, because sometimes people do associate M&A activity with it. You're not. You've got enough projects in your portfolio and in your hands. So let's give people who are new to this story that 1-minute overview of what it is that Cartier Resources is, and then we'll pick it up from there.
Cartier Resources is gold-centric. We explore for gold in the Abitibi Greenstone Belt, the Quebec portion. Essentially got listed in 2007. By 2012, we redesigned our corporate strategy to focus on projects where gold endowment had been demonstrated and we had gold deposits. We picked up from 2012 to 2015 4 gold deposits, one of which was a past producing mine. So in the last 3 years, we've focused most of our exploration work, you know, almost 60,000 meters of diamond drilling within 500 meters of the Chimo mine historical shaft. And we've delivered 2 resource estimates, and we're working on a third, and most likely walking into a PEA. And now we believe it's high time that we migrate towards developing or unlocking the value of our 3 other deposits, Benoist, Wilson, and Fenton.
Okay, thanks for that summary. And last time out, and we'll put a link below in the description to that interview, because I think you laid out your business plan and strategy quite well in that. Yep. So we appreciated listening to it. But you made some promises to me in the last conversation we had in May, which was in 6 months' time, you'd be in a position to make some decisions. So a number of things have happened in the last 4 months. Maybe you want to kind of run through those, and perhaps why don't we start off with the money first, because that's going to give you optionality to deliver on some of the other information you've been building during that period.
Very well. Obviously, in the last 4 months, what we've discovered is, Chimo is clearly moving towards the end zone. We've done the bulk of the heavy lifting, right? And now the game is essentially in the hands of the resource estimate consultants and the engineers to deliver the final value of Chimo. So it requires high-level supervision on our part. But having seen that, we were on the lookout for additional funds to be able to jumpstart rapidly on our other exploration plays. And therein lies the reason for the financing. We had at the time of that decision and that, epiphany, $4.5 million hard cash. And we don't want to burn through that doing exploration work on Benoist, Wilson, and Fenton. So therein lies the rationale for the raise. And so everything that we learned, the strategy, the exploration strategy, and the techniques that we learned on Chimo in the past 3 years, we're going to apply in a dynamic or relatively aggressive manner on Benoist and Fenton and maybe Wilson. So that's basically what we've done in the last 4 months. And when I said we come to a decision within those 6 months, is that, well, at Chimo, we've decided that we've done enough. I mean, sure, we could continue exploring at depth, but we wouldn't be able to capture all that much additional value from deep drilling, for one. For two, it would delay or further delay resource estimate work and engineering work. So at one point, you have to cap off your work and just roll the dice and let it go, and then move on to another project.
Okay, so let's talk about what you did at Chimo, because I think you're looking to replicate that, obviously, at Benoist, Wilson, and Fenton, not necessarily in that order. So let's just show people the process which you go through, because it seemed quite rigorous to me when you were talking about it before. Mm-hmm. But the thing I quite liked was you knew when to stop. I said, we're not going to get any incremental value by continuing to spend money here. It may be a little bit more data, a little bit more information, might help with the decision, but not so much that it's going to make a difference to us, meaningful difference, more importantly, to shareholders. So just let's go with what you did there and what that at the point at which you decided to stop, and then we'll get on to the other 3 projects.
Absolutely. It would be fair, though, to comment to the fact that there's currently a trend, a very favorable trend for gold and a window of opportunity. Hence our accelerated decision. Perhaps if it was a shitty market, we'd continue. But I mean, in this environment, hey, we've done enough. We know this thing flies. So what have we done? At Chimo Mine, the Chimo Mine project is a past producer. So we've had the benefit of being able to anchor or calibrate all of our exploration work on knowns data, 4,000 diamond drill holes, a layout of underground infrastructure, costs of local access to mills, trucking, et cetera, et cetera. And therefore, we were able to focus our exploration on the direct exploration at depth of, I think there was 25 or 27 gold zones, known gold zones. So throughout a 3-year program, we were able to target all 27 zones, bring that down to about 12, and then 6, and now 3. That doesn't say that the remaining 24 zones still don't have potential. It's just that we felt that we've drilled those enough, and they ultimately can be drilled from underground once this thing gets into production. And so we've drilled up to 60,000 meters, as you've seen in a recent press release. 60,000 meters on stuff that's the zones that are within 500 meters of the shaft, laterally and at depth. We've produced 2 resource estimates. With this morning's press release, we're able to shut the database and launch the 3rd resource estimate process. And then once that reaches a critical aspect, then we could bring in the engineering reports and walk right up to and into a full-fledged PEA. Okay. So that's what we've done. We're very comfortable where we're at, and that's why we're also comfortable moving on to our other deposits. And the market, the M&A ecosystem, or what will happen to Chimo, we'll see those recommendations emerge from the work that we've recently launched.
Okay, so again, if you remember when we spoke before, I asked you what's the profile of the assets that you look for, because you went through a process previously. Agnico Eagle got excited by the way you went about it and what you were targeting. So you said to me, we're looking for a historical resource. We need broad alteration zones. We're looking for high grade, but with some bulk, kind of fill in the gaps, as it were. And this is partly because of the pre-X situation. You needed to have some solidity to this to make the I think the word used previously was scandal of that era go away. So do you think now that you've done this work on Chimo that you've got what you sought out to find? I know you've got a PEA coming up, but you must know enough now.
Yes. So that's a 2-part question. Yes, on Chimo, we've addressed the issue. We believe it's going to fly. We simply need to, rush the ball the last 9 yards over the touchdown line. On the other projects, we have the benefit of having been through a process that we know works on the type of deposits that we've, that are in the pipeline of our portfolio. And what we've learned in the last 3 years, our intention is to apply that more comfortably. I mean, the learning curve on Chimo is way behind us, and we're going to apply that more dynamically on Benoist. Now, the business model when we built this portfolio was to identify projects that clearly had endowment, metal factors. I mean, grades of gold over widths that demonstrate that the projects have legs to them. And so for us, we don't want to be prospecting with a drill or burn through cash trying to make a discovery. We focus our exploration on stuff that has already been discovered, but were discovered at a period in time where drilling was naturally limited to the first few hundred meters. Now our job is to just pick these things up and from where they were left off, and to drill at depth and to continue to explore and build ounces on these things. And as luck would have it, our first asset that we focused our attention on was on the very productive and prospective Cadillac Fault extension. Now we are going to focus our exploration attention on what everybody's seeing as an emerging mining district, the Windfall Belt. And so there's going to be a lot of bang for the buck because we've developed a process that can really benefit the 3 other assets that we have.
Okay, so that's great for the company as a whole. But let's stick with Chimo if we may. So you're telling me you got what you sought to get. You knew the profile you wanted, and you think you got that in Chimo. So don't you feel the average grades are just that little bit average for open pit? Do you feel that the economics are not going to be as good as you thought?
I hear that, and that's. And listen, in today's press release, in the second table we present, high grade intervals. And we purposely did that because we get the criticism that, this is low grade or average grade. Well, Chimo, much like any other project in the Abitibi, has its, sweet headliner pockets within the mineralization panels. we always have tended to focus on the number of ounces or the volumes that generate ounces rather than the teaser headlines. And so our focus on Chimo was making sure that the mineralization that we outlined was amenable to mining with modern techniques. Mining in modern times has migrated towards bulk mining underground, or more so open pit, if that in some cases, and so you people that look at Chimo or any other project with a 1990s mindset, well, they're missing the point. Goldex is a brilliant example. Canadian Malartic's a brilliant example, where you take known deposits, you look at them with a modern set of eyeglasses, and you design a program to address that target type. And at Chimo, it worked. And so that's why crucial components of our third resource estimate is to come to an understanding of what is the appropriate cutoff grade for the Chimo type mineralization, and run various simulations and scenarios. And what I forgot to mention in the previous part of the interview is that throughout the past 4 months or 6 months, we've stumbled on what I would call technical discoveries, where discussing with the resource estimate people and the engineers, they've brought to our attention some technical advantages to the Chimo mineralization infrastructure and
Like what? Tell me about it. I'm excited. I want to know. So talk to me more about the engineering, because that's a big part of the last 4 months for you. You've been looking at it from a number of bases. So what are they able to tell you? What are you able to tell us about the way that this could be processed? So if people are 1990s myopic, but
at Chimo, no, indeed, when engineers and resource estimate people look at a deposit, they don't look at it from an exploration geologist standpoint, right? So they look at this and they say, well, why don't you lower your cutoff? Without any additional drilling, you're generating a lot more ounces. But the engineers will look at this and say, oh, hold on, can I wrap wireframes around this? Can I actually come up with a stope design? And so it's a lot of back and forth work with the geological team, the resource estimate team, and the engineering team. And then in the process, right, you get these eureka moments, and when you math it out, when you go to the drawing board, that's what I call technical advantages or technical discoveries that are made that aren't through the drill bit, but through an understanding and a mapping out of the various scenarios. For instance, at Chimo, we know that ore sorting works. We know that if you take the mineralization and you put it through an optical or an electromagnetic sorter, it can sort. The material can be recognized and separated into ore and waste. Hey, it either does or it either doesn't. If it doesn't, that's it. You don't investigate that path anymore. In our case, it does. In our case, we're also very proximal to the Val-d'Or mining camp. And you could either truck your ore on paved highway, or you could truck your ore on forestry roads. You could send it to a lower volume mill, or you could send it to a higher volume mill. And we have the advantage of having locally, I think, 6 mills by 6 different owners. You've got the Laron mill by Agnico. You've got the Canadian Malartic mill, which is co-owned by Yamana and Agnico. You have the Goldex mill, which is Agnico. You have the Westdome mill, which is Kena mill, which is Westdome. You have the QMX mill, which O3 has an option on. You have the El Dorado mill. You have a lot of different players, a lot of different mills, and all that optionality that goes with it. And that's an important part of the engineering design of the project, is to unlock the value of each scenario, to be fully aware of which scenario can give you a revenue of X and which scenario gives you a revenue of Y, and just map it all out and just,
Which is great. There's a lot of theory there, and there's a lot of, that we're close by to a lot of mills and stuff. But let's go back to the processing component. Our stuff, the sort of works for our stuff. What does that mean? Do you know how much work have you done on that in terms of the engineering? Is it saving you 10% of throughput, 20%, 30%? What's the increased recovery rates? What's the cost of it?
The cost of it is actually low. So that's the ore sorting plants themselves, purchasing them and installing them. That's low. That's a low cost item. It's not even mentionable in terms of CapEx and OpEx. The essential point is the trade-off. Are you better sorting this thing and high grading your ore, lowering the trucking costs, sending it to more potential mill sites, or are you going to just throughput as much tonnage as you can at the lowest grade possible and just send it to a local mill and let them sort it out? It's the measure of trade-offs that we're going through right now. That process is ongoing, but obviously you can assume that if we're doing that process, it's got passing grades, and so therefore we're gonna deliver on that.
Okay, you're walking towards this PEA. When do we start getting more clues about the economics around this? Do we have to wait for the PEA, or is there information that you're going to be able to share with us before that point?
Well, ultimately, the public has to wait for the PEA once published. The more sophisticated investors will actually wrap their heads around what we have. They'll go to local other PEAs and 43-101s where you could find in these reports these cost estimates, these trucking costs, these milling costs, and they could piece together their own napkin study PEA type thing. Right?
So who are your peers? Who would you consider your peers?
Our peers, local peers?
Yeah, in terms of similar ore bodies, etc.
Well, not in terms of similar ore bodies, but in terms of similar dynamics. There would be Monarch, there would be Radisson, there would be Probe, there would be O3. Listen, even Agnico Eagle in 2006 developed the Lapa mine. And the Lapa mine ultimately produced 825,000 ounces of gold, right? From 2006 to 2018. So don't let anybody tell you that senior mining companies don't tackle million-ounce deposits. They do, when it makes sense.
Okay, we're going to come.
And so we're working on Chimo to deliver it. We've already at 1.2. We're working to deliver a minimum of 1.7 that we arm waved at in our corporate presentation. And I'm quite confident that we may even top that.
Okay, well, that's where I want to get to. So we will come to that point because I want to work out who's interested in you, who's going to be interested in you. So you've been through a process with Chimo. You've learned a lot. You're going to be able to apply some of those learnings to the other three projects. Now, I think obviously Wilson potentially is not high on the agenda, but so you're going to tackle Benoist and Fenton first. And that may start to give you the scale, which makes it a bit more interesting to a few more majors. Okay, so let's talk about Benoist, if we may. Okay, so what are you doing there now with this new money of yours, or what do you plan to do? Just give us a clue.
Listen, if we dial back to 2016 when Agnico Eagle invested $4.5 million for a 19.9 stake, that $4.5 million was to drill Wilson, Fenton, Benoist, and Chimo. We never got around to drilling Benoist. So it's a given that we already have a drill program mapped out for Benoist. However, in light of what we've discovered at Chimo, the program at Benoist has now developed into a 3-component program. We will be drilling the natural depth extension of the Benoist deposit as known today. We will be drilling the deep-seated ore vision anomalies that are distributed in and around the Benoist deposit. And we will be drilling the deposit itself. All 3 parts of the program are directed, or their objective is to rapidly vault Benoist into the limelight and properly evaluate. The drilling the deposit itself is meant to reflect that, whereas at Chimo we had historical metallurgy and rock production and production reports, at Benoist this is not a past producer. So drilling the deposit itself is meant to rapidly jumpstart metallurgical studies on the project, whereas drilling the extension of the deposit and the ore vision anomalies is meant to build or scope out the potential that this project has to, deliver how many ounces in a set given time.
Yeah, I mean, because with Chimo, you obviously you talked to me in the past. You said, we picked this thing up for less than $1 an ounce, which is great, and we've got these other projects in the background which you parked up, but now you need to reactivate to.
Yep.
I guess what I'm trying to understand is how do we? Your share price doubled since we spoke. Okay, so congrats on that. You're up to sort of 30 cents a month. So that's good news. But you've got some way to go because you're still only, crikey, $65 million company. Okay, the process is right, the planning is right, the team's right, the experience, the track record, all of that. Agnica, there's a lot of good markers in here, but you're still 65 million market cap. So what are you going to need to do with Benoist, with Fenton, to really get the market excited? Okay, to show that there's more growth. Doubling is fantastic, but what next? What do you need to give to the marketplace, in your opinion?
Well, in our opinion, the market has only recently started to recognize some value at Chimo, but zero value at Benoist, Fenton, and Wilson, because these are all historical resources. They're not 43-101, given to the fact that they were essentially outlined and drilled off before the Briec scandal. 43-101 norm and regulation comes into play in 2001. So what we aim to do is to take the historical resource estimates that we have on these projects and flash them out. Okay, this is our embryo, this is our start number, and look at the program, and the program is built to develop rapidly, expand the number at the ounce count. At Benoist, for example, there's, I think, 500,000 tons, historical resource estimate, mind you, not 43-101, 500,000 tons at 5-ish grams gold, 12-ish grams silver, and 0.3 copper. So if you take 500,000 tons at 5 grams, that's about 90,000 ounces, like in the first 100 or 200 meters. But we've drilled down in 2014 to 750. We know the system's there. So we have to design a drill program that will clearly show the market the value that we're building at Benoist, and have it understand the value at Benoist and also at Fenton, and then ultimately at Wilson. Right now, we're getting zero value for the 3 other deposits, and we're also only getting partial value from Chimo. So our challenge is essentially not a technical one. It's raise awareness of what we're doing and have the market recognize our value. Have the market recognize that we're not vulnerable financially because we have the cash. We have the right team to do the right work, and obviously we have the right assets in the right location. It's, the market valuation will perhaps at one point meet the corporate valuation, and that's where I think the value proposition is.
Okay, so you've raised 9.3 million in flow through shares recently. You've got about 14 million in cash at the moment, roughly 14 million, right?
Yep. Absolutely.
I'm intrigued by the conversations that the board have and say, right, we're in a gold bull market. Money is flying around left, right, and center. Why 9.3? Why not 25 million? Because obviously, with the shares doing what they've done, this is not very dilutive to you. It's also one of the largest sums of money you've ever raised in the organization. Why not take more to accelerate this so you can actually deliver in a very positive gold bull environment?
That's a good question. Obviously, there's a world between investing funds properly and just blowing it out and spending it. 9 million-ish is on the high side of what we can, appropriately manage and deliver in the Cartier fashion. Above that, the work would get done. We can manage it. We could deliver, but it wouldn't be it wouldn't respect our signature program. So that amount basically reflects the back end interest that we were able to generate. 9.3 million, and you mentioned it, is flow through. So when you raise flow through dollars, it's a promise to the to the market that you're going to invest that money in exploration. You can't use that money for G&A and stuff like that, right? So the retail investment community should be hearing, wow, we're going to get $9.3 million worth of diamond drilling because Cartier doesn't fly airborne surveys or do grab sample trench, trench programs and stuff like that. So, the majority, if not all of it, is going to go directly to diamond drilling. Some reserved for engineering and 43-101 resource estimate work. It's going to be a very, very dynamic year for Cartier in terms of news flow, in terms of deliverables.
Okay, so I'll buy that. Back to Chimo. Let's just stick with Chimo because it's the kind of case study for everything else. Which is, what's the end point? Remind people. I know we've discussed it before, but what's the end point for you? And how much more money and how much more time is it going to take to get to that point?
We're looking at $500,000 to $700,000 to complete the work on Chimo. Have the market fully appreciate in terms of resource estimates and preliminary economic assessment of the project, the value of Chimo. From that point on, I mean, it's a different ballgame. The market comes into play, the corporates come into play. Even at the board level, we have to make a decision of how we're going to capture that value and monetize it for our shareholders. So, what remains to be done on Chimo is simply the, bringing to the market a valuation picture of Chimo. And from that point on, we've got two elements. We've got a defense mechanism if there's an opportunistic bid or a delinquent bid on Cartier or Chimo. And then we have the blueprints to build it ourselves if we have to make that sort of decision. So we'll have covered the basic needs, as a team, and we'll have protected what we've generated as value.
Okay.
We'll have protected that for sure.
Okay, but let's be real. You're not gonna build this thing out. You want to get someone to come in here, but buy the asset. You've left something on the table because you haven't gone down as far as you could do because the system is still down there. You understand that. So there's still something left on the table for whoever comes in, and you just need to price it accordingly, and that gives you potentially enough money to develop out the other three assets in a similar fashion. That's your business model?
That's the business model. In the best of worlds, that's what you do. Junior companies a 4-man team junior company that says that it's going to build a deposit in this day and age with the permitting, with capital raise, it is. I mean, you gotta be credible when you want to do this type of thing, right? It's one thing having a 4-man team and doing exploration, quite another having 200 men on site or women and having health and safety meetings on Monday morning. It's two different worlds. And, if you decide to walk the talk and say you're going to build this thing, that can become scary. And that's why, you could always have that up your sleeve. But at least with the third resource estimate and the engineering work that we're doing and eventually the PEA, that will spell the value for Cartier and its shareholders. Obviously, we're hoping that all of this that's done and delivered while the price of gold is still going up in the market is favorable. And so that's why we're very content where we're at right now.
I bet. I bet.
I would hate to be delivering when the market crashes.
Yeah. Well, that, again, it gives us a view of what we're walking into as investors. What are we walking into? Are we in this for some sort of long haul with you, or is there an event coming up soon? And I suggest it's the latter. In your case, and I kind of
there's several events coming up.
Several events coming up, but one sooner than the rest. Okay, and that's what again I want to understand what I'm walking into. There's an event which could capitalize the company for further growth, future growth. So that's the kind of company we're buying into. Well, look, Philippe, it's lovely to catch up with you, and I know we're going to catch up in a few months as things progress. I know we've talked about staying in touch a bit more regularly, so I appreciate that. And it's like again, for people watching this, do look at the link below for the previous interview. Kind of outlines the business plan quite well. It's a great update. Things are going well. You seem to have delivered everything you told me you were going to deliver, which is unusual. And COVID not making too much impact on moving things forward. Dates not changing.
Well, I'll tell you something though. Because of what I mentioned earlier on, people not taking vacation time, right? Saying, oh, well, I can't travel abroad.
Right.
I can't do this and that. So I'll just stay at work and stuff. And then working off-site, working from home. We've managed to do it quite well. Will some of our contractors or some of our other groups that we intervene with, will they manage that the same way? You know, when you have a whole bunch of different moving parts and they try to coordinate meeting times, and that falls because, you know, things get bullied around a bit. So we could answer to our plans, and that's what we aim to continue doing. It hasn't impacted us yet. What will COVID bring us in the second wave or even third wave? I don't know. But we have taken the necessary steps here to manage that accordingly.
Good. Okay.
We have the cash.
And you do have the
We have the
cash.
team, and we have the assets.
Okay, well, Philippe, let's speak soon. Stay in touch, please. You've got a bunch of deliverables.
Yes.
Keep doing what you're doing. We'll speak soon. Okay.
Absolutely. Have a nice day, sir.